All right, good evening, guys. Thanks for your patience. It's the nightly strategy podcast for July 2nd, 2020, weekend holiday edition. So, with the market closed tomorrow, I've published the weekend reports already, so you can download them from Patreon or from in here in the handout section. I will do the thematic reading and all that stuff tomorrow, what I would normally do on Saturday. I will do that tomorrow night, and then Sunday I'll still do the review of trade frames. So we're going to be basically taking Saturday off. Okay. So let's get started and see what we got here. Doesn't this look like a great big elbow in here? Yeah. All right, so let's see where So yesterday we said the market was once again poised at a critical state, right on the edge of sideways market. It had just barely edged into bullish normal. It was resting right along the RL90, which is that upward trending, almost a weekly regression. That 90-day regression has been pretty strong. And yesterday, for the first time in over a week, it had been able to close above the skin of this horizontal dragon. So if we look at that dragon carefully, let's get this junk out of the way. We'll notice that that dragon's been fairly sideways now and remains sloping almost perfectly sideways, with price, the 10-period regression line right on the Bollinger Band mean, right in the middle. So the RL10, moving RL10, is right in the middle of the this sideways river. It's a normal volatility, so this is actually this is about as sideways quiet channel as you could want. The RL30 is back inside the river and is just a fraction above the dragon. So everything is so tightly clustered here at this sideways Bollinger Band mean that that's about as sideways as you can get. We've seen we made a new 10-day high today at 315.5 ish. When we look back 10 days, we then find the low was made 4 days ago. So this full 10-day range is made in the last 4 days, and all part of this bounce. So we've made the 10-day low and the 10-day high in this week. So it's been quite a ride up. Now, interestingly, the summer had turned to fall, made a low, a lower high, a lower low, and is now back basically to the middle of that RL10 shape. So, and it's right on the Bollinger Band mean. So it's made this little sine wave here in 10 days, a little yin yang, and has just gotten back to normal. But this was downward sloping enough that the dragon, which has been sideways compared to the 30-period simple moving average, the river, which is sloping up, this actually is enough weakness in the price lately to turn it from fall to winter. So what that tells us is that if this thing falls out of the dragon next week after the holidays, cooler heads prevail, this is going to be a supported winter crossing if it falls down below 306. So that southern skin of the dragon is going to be decisive. Okay, so we've enjoyed the 4-day move up, but today, for the first time all week, you'll notice that it gapped up, biggest gap up, but then sold off during the day and closed poorly, just above yesterday's high. Now it's still net positive and still above the dragon, but this was not a vote of confidence over the long weekend, but I'm not going to read too much into that. Just only to say that this has been a nice 4-day 6% move, but if it breaks down below the dragon, then it's back into supported winter crossing, and then the downside is going to take over. So let's take a look at that. First, the downside price levels for support would be today's low of the day. It's just about 315.5. I'm going to call the next one the peak RL10 is this one, peak RL10 at 311. The next one, the PSAR. Now we're above. We actually managed to close above the PSAR today. That PSAR is still in effect because that's being computed off of the RL10. It's not until the moving RL10 gets above the PSAR that will actually flip. So this was like the first break of that downward slope. So let's see what it can do on Monday. Miles to go before we sleep on that one. Next up would then, so the PSAR at 310.25, upper skin of the dragon 309.75. This to me is the real strong support level. This is the coming together of the RL10, moving RL10, Bollinger Band mean, spine of the dragon. So that's got to be solid support. Lower skin of the dragon, 306.05. So if it breaks through the spine, I want to try to get short inside this lower half of the dragon so that if it does break and then breaks below the RL10 bottom at 303, then I've got short positions in. Then we would see, let's see, the Z1 at 301.5-ish. The RL270 long-term fair value 299, 10-day low here at 298. And if it breaks down below 298, then it's Katie bar the door down to the 30, down to Z2, and then the 30-day low, quick, fast, and in a hurry. So lots of good, strong support levels in here. Lots of reasons to believe that next week it can make a run up. So if it were to go higher, then we would say, well, it's got to get through Z1, the 10-day high, and then the peak of the dragon over here. That's the statistically significant one at 316.5. So if it can get through there, then it's off and running free and clear, and then it gets up to Z2 pretty fast at 321.9. Okay, so this was these last 10 days have been a tale of two trends, two micro trends. Everything within the river, so lots of posturing, but this is where that crocodile river chews you up if you're trying to get swing trades on, because there just hasn't been decisive follow through and plenty of reasons to doubt this whole move. And so my posture at not holding swings overnight has been very relaxing and has allowed me to trade the intraday trade with a little more calmitude and relaxification. This was a good recovery week. It bought back all of the pain and suffering, so it answered the bell. It took 4 days to recover what it lost in 4 days. So, I call that a draw. But you can see just how strong this resistance level now at about 316 is. It's had 1, 2, 3, 4, 5, now 6 days, 6 different efforts to break through and hasn't really been able to. So today was the first day that it's kind of recovered that last peak. So cautiously optimistic, but prepared to exploit in either direction. 80% of my emphasis is going to be on the day trade. Just continuing to hedge my my core positions and using the day trades. All right, let's see what worked. All right, so the S&P was up 0.5% today. Let's find the other indexes. So diamonds lagged a little bit at 0.43. I think the Russell was good today. Let's find the Russell. Where's he at? Oh, I'm sorry. There's the Russell. So the S&P was the strongest at 0.55. The Dow at 0.43, the Russell at 0.41. Let's take a look at the downside. What underperformed today? There is consumer discretionary, lumber, finance, treasuries underperformed, but they were up a fraction. Real estate, silver, Cisco, wheat and precious metals, on property. Facebook finally gave up after 3 days of just really strong outperformance. It's kind of back to normal, and the press is back to attacking Zuckerberg, and properly so. That I just call him Teflon. He's the guy that nothing seems to stick to. He's the guy that never has to pay a price for the compartmentalization and the fractionalization that comes from Facebook and social media. Other symbols that underperformed. Some of the tech leaders gave back today. There's Amazon. Twitter was not able to follow through. Apple underperformed. Cisco underperformed. What worked on the upside? Tech was marginally better at 0.58. Japan and healthcare 0.6.5 and 0.7.5. Microsoft taking on that mantle of tech leadership, up 0.76. Eurasia 1.1. Energy finally had a little rebound at 1.11. So Devon Energy at 1.25. USO 1.4. Mexico pulled away from Brazil and the market today, 1.58. Google and triple Qs did well. Basic materials were excellent. And then let's see, there's Nucor, XOP, US Steel. That one paid off really nicely today. So we framed that one as being like the #1 priority trade for today. When you listen to last night's spiel, we kind of made the argument why US Steel was postured either to fall to 5 or to rebound from a oversold critical state, and so today it kind of voted to the upside. A nice one-day move, and they're not out of the woods, but this is the reason why U.S. Steel is attractive as a trading vehicle. Clean energy up 3. That FRTA's little speculator there, 3%. Wind traded really well today. That much like U.S. Steel was in that critical state after a huge sell-off, and it was either going to collapse or trade intraday nicely. It traded intraday nicely. Elon Musk, I thought Zuckerberg was the guy that couldn't be touched, but Elon Musk has taken on that mantle, up 8% today, and surpassed Toyota as the world's most valuable car company. It's just maybe I'm blinded for having worked inside the auto industry before I went into the service, and having been automotive associated with production my whole life. I just get blinded maybe by the cult of personality and the fact that I think he's P.T. Barnum. But, you know, more power to him. The next big piece of news from Tesla might be if they were to use that Cybertruck with that stainless steel body as if they were to sign a vehicle transport contract with Department of Defense, because their Department of Defense is trying to spread the wealth around a little bit. They just gave GM some money for an infantry squad vehicle. So that's the next piece of hidden news on Tesla that might give them a boost. Unlike Toyota, they're not actually making money. So yeah, lots of things to choose from today. Let's take a look at the what I should have said also on this trade, that the gap up, quick test, but then a real willingness, when there wasn't a runaway move. I think it was just people willing to harvest their gains from this week on the best prices they could get, and then be flat over the weekend. That was also my motivation today, so I'm not surprised that that's reflected in the broader market. That's what I think was happening today. But the kid gloves come off next week. We're now deep into a hot summer. There's going to be a lot of news about peak virus and powerful men in trouble from Ghislaine Maxwell's arrest. Well, there's some powerful men that are trembling improperly, so they ought to be trembling in prison. And we'll see if she can survive being in government custody better than her mentor. There's an intriguing documentary on Netflix called Dirty Money about Epstein and this lady. Not for the timid. It will turn your stomach. So let's see how that shakes out. Anyway, that's what we got from today. I guess I want to give a quick look at the broad market since we're here. So this will probably be a little preview of tomorrow's coming attractions, and I just may end up playing a replay of this one tomorrow. So here's the monthly. Let's just frame this rascal out. That's our where's this week? This feels like weekly. Yeah, this is the weekly. Let me go to the monthly. I'm sorry. So on the monthly, we're only 2 days into this month, but we are at the upper end of the dragon. So that's still a good thing. Let's work our way down and say dragon spine, dragon belly, Bollinger Band mean, Z1. I'm going to take the previous monthly low as a significant one too, just because, and maybe the 2 months ago low. Z2, fair value, Z3, maximum adverse. Well, I guess we got to go with the PSAR flip, the Z1. The RL10 excursion is basically the PSAR flip, as we know. That's proper. I'm going to say previous peak Z3 and current Z3. And I got to put that PSAR in there as well. And then today's high. That's not even on a monthly. That's not even a thing yet. So plenty of framing data for us. This is an interesting posture to be in. This month started well. It's hasn't made a run down. What can we say about this? Yeah, cautiously optimistic. I mean, it cleared that ridge of the dragon. I guess that one to me is the significant. That's the significant thing. The significant stay above. That's the significant, like 310. I'm gonna call that 310. And that one feels important to me. Can it stay out of the dragon? Weekly. Let's take a look at the downside first. We're going to call the southern skin of the dragon about 295. PSAR and Z1. Maybe we got to look at that, just see what that, split the difference with the RL30. I don't normally frame to there, but that one just feels right at Z minus a half. Belly of the dragon, the final PSAR, and the RL10, C2, C3. Upper skin of the dragon. If it can get above fair value, that's a good thing, I'm thinking. Z1. Upper skin of the dragon. And really the RL10 is the same. Peak. Let's make that one thicker. That's really the big deal of the day up there. Can it get above 340? I guess you got to draw those lines, but man, who would believe any of that? I want to say that this little sideways, there's almost an extra sideways channel in here that feels kind of crucial, and I would put that like between. Maybe I'll make that orange. I don't want to give it a negative connotation, but just think between that fair value and the Bollinger Band mean is really, that's where all this chop of the last month has been. There was that the first 2 weeks, that were up in here. That was one thing. This orange space just feels like the real tentative, a shift in market mood, if you will. There's been a couple tests of that. Each week of the last 4 weeks has featured a significant test, and every time it's held at 300 or above. And this little rebound this week, was an effort to pull away from there, but it hasn't really been able to clear that 312, 313 price level. of fair value. So it's kind of locked into that tight 3 or 4% range. And maybe that's just where, the indecision, everybody wants to just kind of hold it there till we see what kind of new administration is going to happen. Could that be the case? I don't know. But the next block up would be that blue block, which gets you above 320. And then that would be, so I think if we can get above fair value, about 313 and hold, then 320 is in sight. And that would be a pretty good move as we head into a long, hot summer with the return of the virus and the second wave happening. And there was some spin on the jobs report today, but I think a closer look at that's going to say the unspoken story about just how many people haven't come back. So a lot more people came back than they thought, but the number of people that haven't come back and are suffering after we've printed 15 trillion is still problematic. So let's see how this goes. There's nothing in that setup on the weekly that tells me to be in a hurry to get swing trades. I would say, except on the downside. If I was going to be in a hurry, it would be towards the downside, because I just think that's that failure to follow through is problematic. See, the last time it was stuck in that kind of, it voted up pretty quick and gave us this kind of move. So if we took that as a sign, where could this get to? Maybe something like that. Yeah. So that 330 to me, I guess, is kind of in range. I could see that. But after that, it really gets problematic. And I'm just going to put another target line in here. I just think the top of this one. It really has to get through that as an actual price. So the statistical measure of the Z1 is interesting mathematically, but the actual higher high, where it rejected the, or we could say the termination of the previous run up ended. And then I would just say, look, I want you to notice how strong the RL10 has been in here. This whole, like, the RL10 is kind of the true peak of price, and that everything north of that is just kind of noise. So it's nice to see that it closed right on that. So that's a market that's just, it's pretty, I think the boys were content to get it back to that price level to go into the weekend and then exit their positions. I think that's what we saw today. And then I think they're going to come back rested and make a real run at this next week. Bulls and bears are both going to be rested and are going to start playing some fear and greed. And to me, the downside of this is more troubling, or just feels more likely. When you see a guy like James Carville undercutting the president, saying, hey, there's a good chance that he's going to just drop out of the race, or what if he gets sick? Boy, would that change the political calculus, because it's a different race, Pence versus Biden. The same people that hate Trump are going to hate Pence, but a lot of people that are worried about Trump aren't worried about Pence in terms of competency. That suddenly changes everything. And you could see like a Condoleezza Rice coming in as the VP for Pence. Man, that would be something. So lots of stuff to work on there. The 30 minute. So we're just going to have a little bit of fun with this one. So this is that time period, that 30-minute time frame is the one we use to. That's sort of a combination of very slow day trading, but also very fast swing trading. So let's just look at some reasons why we might be interested in that one, particularly if you've opted for a reduced exposure on the swing and like a reduced exposure on the core, so you're emphasizing more of the day, but you don't want to be full-time day trading. Well, now suddenly, come on now, let's get this thing going. This was supposed to give me a little sketch pad, but it didn't. Okay. Well, let's look on the 30-minute. You can see how nicely this our little SSC patterns work. Here's a great big. Let me get a thicker pen on this thing. Getting a great big winter. Support at the RL10, support with the RL10. And so what I want you to notice there, that makes that little formation now makes this cross right here really strong. That's the one you got to get. Because if it was going to fail, you would have expected this to fail and down to test this, and then you would have had, two reasons to go short, but it didn't. Instead, you get this nice long move. Supported all the way up by that Bollinger Band mean until right at the end of the day when it gives us this Bollinger Band mean exit here. Nice strong upward channel all the way through here. And again, I want you to just notice that when this thing is working, it rides that Z2 line pretty nicely all the way. And that Z1 channel. And then this kind of gives you that alert. In each case, you saw a bit of a pullback. And this is one where I think you got to be really ready to take in the last half hour of the day when you saw a peak and then a lower peak, and then you notice the RL 30 rolling over as well. That's one where you could take the sniper exit at the PSAR instead of waiting all the way for the Bollinger Band mean, and that's a $2 or maybe $1.50 difference. Which is 0.5%, so you don't want to give that back. Looking at this thing now, I want you to just also notice the reason to love, the supported winter crossing in here. When this thing had that much time to make new highs and it didn't, and then everything starts rolling over, you got to be in that one not later than the Bollinger Band crossing or the Z1 crossing or the Z2 crossing, because that's going to give you the collapsing dragon right in there. But the reason to take a shot instead of waiting for the CD, which is here, I mean, that's just a no-brainer. But the reason to take that shot up in here is because the size of this move was the size of the second move. So you're getting 2 scoops. And then the amount of price action that makes you wrong, that original PSAR is not very much. So you're not paying much to be wrong. There's for the tactically savvy, here's another opportunity to get short in here where it makes a low and makes a tight band high and then rolls over pretty quickly. There's another whole leg down right here. And what I really want you to notice is just how quickly the fails occur. When SPY fails, that thing fails in a red Niagara, 3 or 4 bars, and that thing is smashed. But then notice how long it takes for it to make these little rebounds. They're tiny little grinding moves. So you got to suffer all the way through that. Those collapsing dragons, they're asymmetrical. That's the reason you don't mind taking that hit, or hitting it quick and seeing because if it pays off, it's gonna pay off fast. It paid off fast over in here, paid off fast in this big cell, paid off fast in here. So that's worthwhile. Okay. So that's the 30 period. That gives you some interesting time to start making some measured plays, if you will. All right. So it ends the. I guess I want to do. I wonder if I can just delete. Oh, it deletes everything. I don't want to do that. Sorry. Yeah, it finishes the day kind of weak, but it didn't panic. And the important point to me is if we were just looking at this I'll use the orange because I haven't used it yet. It held above Thursday's, main body, if you will. So even though the day was down, it did hold above yesterday's support level. So that is, to me, that was just tactical selling. I think they got as much out of this as they could on the gap to see who they could trap, and then spent the rest of the day with tactical exiting of positions. That's what it feels like. Okay. Just a couple trades I want to. Let's see. Now I got you in here, so let's just go ahead and review the weekend report now, and that way there will be not so much update to that tomorrow, I don't think. Let's see if I can call that rascal up. Doesn't want to show me that. All right, let's stand by. Nitro, where are you? Trying to get that rascal opened. Not too frustrating. There we go. All right. Thanks for bearing with me. All right, so this is the weekend report. We're back into bullish normal conditions at 3.43% above the 200. So we got about 1.5% of support. We're overbought still on the 90-day and otherwise above average on all of the other NDX look back periods. ADX is still very weak at 13.7. So that's perfectly consistent with this sideways critical state that we're in, where it just feels like they just rounded off the rough edges today and turned in a nice tactical week, but didn't really expose themselves directionally going into the weekend. The risk Z has given us moderate support for swing trades. I'm still reluctant. We've already seen the health checks, so I'm going to scroll through those pretty quick. All right, so looking at the Bmr portfolios real quick. Let me let that come up on your screen. So Australia, well done this week, Luke, and today. Australia really stands out, and Latin America had some nice recovery. Treasuries held fairly well, only down 1% during this week of rebounding. In the ETF 22, materials had their rebound, and financials still just getting crushed. I should have done better on that one. ETF 32, the clean energy recovery was spectacular this week. Spectacular. So let's go. I'm going to frame that one this weekend to see what else we can get. Gold held steady at 0.26. It didn't give anything back, but it's just biding its time, if I may say it that way. In the Dow 30, Apple and Microsoft crushing it. Nike, Procter and Gamble, Boeing, and Pfizer. Pfizer finally turning it around. I think there's more room there. In the sector spiders, healthcare, materials, retail, real estate. Okay. And then big losers in financials of every type. And the ETF Max, that clean energy was really just the story of the week. PBW. ETF regionals. US Tech is the only thing in the green anywhere on the big board in terms of the broad indexes, that the Qs. I didn't pull the trigger on. I've been looking at that. Taking a swing on the triple leveraged NASDAQ. I didn't want to do that going into the weekend, but I'm going to start looking at that hard next week to see how it comes out the gate. The two interesting stories to me there for swings is going to be financials. They were the biggest underperformer this week. Are they going to recover, or are they going to really start failing? And then can tech maintain its dominance? So those are the two most interesting ones to me. The next two interesting ones are this energy and basic materials, XLE and XLB. They've been oscillating. and they both recovered pretty well on Friday, but they've been underperforming. So I'll be looking to see. That's sort of like a minor theme. We'll see what's up with that. You can see in the regional report that just the Qs are just running away with the win right now. Nothing else even close. And then in the sector spiders, XLK crushing it, along with consumer discretionary. Oops. In the ETF top 30, according to the ETF2 database, the Russell 200 or the Russell 2000 Growth Index (IWO) is green and white, and so this was interesting. We're going to see that the Russell 2000 moved into second place in the U.S. indexes, ahead of the S&P and the mid cap. So that's kind of interesting. Maybe is that some speculation coming back in, and some positive trading in the small caps by large traders? There could be. We'll see if that trend continues. So IWO would be the way to play that, as it has enough volume. In the ETF liquidity, the tradables, gold, energy, Brazil. I want you to notice about half the volatility came out of Brazil, because that used to be up around 5.6. It's now down to 3.88%, which is still good. Still liquid, still volatile, but some of the panic is over. And then in the full printing of the top 100 most liquids, we'll just want to zoom down and look at the so regional banks are doing better than the big banks. KRE, that's yellow and red. USO still just getting smoked. That's going to be down there for a long while. And now Saudi Arabia is threatening another oil war. That's so geopolitical right now. You got to wonder. That could be an effort that could be something as stupid as trying to bankrupt Venezuela. That could be Russia and OPEC trying to crush Venezuela to improve their own oil posture. That's hard to see. Man, energy is going to continue to be for the next 6 months, and that makes XOP and XLE really, really interesting. Looking at the daily, bullish normal. Yeah, I think we saw some of these already. The risk Z is getting back closer to spring. It's now at minus 0.32, hinting towards the possibility of swings. You'd really have to convince me of the value of the trade if it was outside of the tech arena for a long side swing right now. I'm not. Maybe banks, and only because of a recovery, because they own the world. It's hard to see how the great big banks are going to suffer, and they're at a moment of value right now. JP Morgan down there in a 10-day max pain, along with American Express. It's probably time to start working that. Energy sector with Devon Energy, ExxonMobil, well postured. This recovery in Pfizer could be strong. We saw that one, I think. Boy, that's a stake in the ground right there on fair value. You know, it had, so yesterday was that great big gap up well beyond fair value and then sold off harshly, but then a gap up and it held all day and closed right where the gap was. Maybe that 34.5 is the true correct price. So it could be that, you know, that 15 days of sell off after the earnings, maybe all that is a complete change of hands and ownership there, and now they're ready to work it higher. I think that one's very interesting. I think he aiming for 36. Yeah, that's. I think you could convince me on a swing trade on that one. Like if it moved just above that green line, with another one above the Bollinger Band main. I'd like to get 2 positions in there. And then I think we're looking at, this is where that big sell-off occurred. So then if it can get through 35.5, then that becomes really powerful. And then if it gets above that hump right there, above 36.75, yeah, Pfizer, I'm interested in that one. Yeah, I like that one. That's a deep value play. Big Pharma going to go to 0? I don't think so. So I like that one a lot. Pfizer is very interesting. Asia less Japan fired on the a short on the overreaction. So that's one that would say its rebound has been so strong that if it starts to fail and goes back towards the sell-off, then EPP would be the first place to look to get short. Yeah, Pfizer's very interesting. Neil points out on the daily it's SSC. So yeah, that's Pfizer is a really special case right now. That was going to be fun, especially if healthcare starts to make some recovery. The combination of an interesting company and a recovering sector, if there's any kind of market support, boy, Pfizer could be nice. Dow Tactical summary, most every, half of them are in a doji. Half a dozen test out well on the auto framer. So let's see. Yeah, Pfizer was a big winner today. What else am I seeing in here? I like Nucor Steel. It was a winner today and finished with a doji. That one might be ready to go. So Nucor is just in here because I'm waiting for Raytheon is the actual member of the Dow that's not in that Dow 30, but they just recently reconfigured, so I wanted to give them some time to get some pricing data on them. And in the meantime, I wanted to study Nucor. But Nucor was in the green today and was a doji, and XLB started to show some strength, so Nucor could be postured. Let's see what we got on Nucor. Yeah. We said down here that big orange dot that if it could hold support here, it's would be interesting. So today was the first time out of that. If it can get above 42, I'm liking it. This will be that turning point. Start that as a hybrid frog only. And I compare that to, say, U.S. Steel. Also kind of in the same posture, but it has more room for gains. I like that in U.S. Steel. We may have found the bottom and are ready to make it. It had a nice move intraday where it ran up but then couldn't hold, but it did hold above that our little yellow box of support, and that's going to give us some rewards over the next couple months. That's one to fish on that one carefully. That's what I would say on that one. Don't hurry it. Um, in the ETFs, XOP had a nice bounce today after a horrible 10 days and 1 month, and that coincided with strength in energy. So XOP, let's just go take a look at him while we're here. Yeah, XOP. I'm going to get on board that one. This is, yeah, just like that. And ready to go on Monday, just that quick. This is like kindergarten arts and crafts sometimes. Don't make it harder than it is. Yeah, that's ready to go. XLB. What makes that interesting is that you saw the two steel companies, Nucor and U.S. Steel, are not as far advanced in their recovery as the whole sector is. So that makes you wonder, well, who is winning? Alcoa is not winning, is it? I wonder, Cliff isn't winning. So this is one where I might go into the TC 2000 bundle and pulling up the sector indexes. Which one? I'm trying to remember which one of these is material. Yeah, industrials. Industrials are looking good. Tech. Consumer cycles. Yeah, so that's materials. And now I guess if I want to look at the components. Yeah, I like materials right now compared to those other sectors. That's not bad. Yeah. Okay. You got to like the fact that Apple has a. We're looking at the pinch and stretch report now. Microsoft, the most positive Z-score stretch. I'll let that come up on your screen. Yeah, so Microsoft, the Qs, Apple, XLK, and XLB, all in that's where the relative strength leaders are. And even the negative Z stretches are still all within the river, so that's actually healthy and shows evidence of healing. The auto framer has XOP on it at 4.6 to 1.